This is where my life belongs.
Hope you guys are safe, staying sanitized and maintaining your social distance as we go through this virus. Alright, so I want you to look on stock valuation, and you're going to review the notes that you have there in your study guide, and then we are going to, if you have any questions, then you can post that in the comment section below, and I will address those questions from the notes. Now this question, I think, is question 4 in the study guide, but you can look for it, but I'm going to change it up just because I wanted to get an understanding of how it is that we do the various methods. So here we have a question. Even though part A is saying that you're supposed to do the AVCO method, we're going to use this question to do all 3 methods of stock valuation at the CSEC level. So we're going to start first with FIFO, first in, first out. Then we're going to move into LIFO. Then we're going to do AVCO. There's no one set format to do stock valuation. Basically, for CSEC, you're going to complete the stock valuation card that is given. But once it is that you have the basic concept of what is a receipt, what is issue, and the balance, then you will be fine. So receipts will be now everything that you have purchased. Issue will be sales. So let me just put it here. So this is purchase and this is sales. Alright, so the first method that we're going to look on is FIFO. Alright, so let's look back on the question. This question can be a bit tricky because persons will look at it and they will want to enter all the receipts and then enter all the issues. Because accounting is done in chronological order, you have to pay attention to the dates here. So first thing we have the 5th, then we're going to have the 8th, the 10th, the 18th, then the 20th, the 26th, followed by the 30th. Alright, so I'm going to split the screen so that I can have both on it at the same time. Alright, so bottom screen will be for the stock card. Alright, so let me enter now. So we already know that this is for 1999. Alright, so we're going to put August 5th. Alright, so August 5th we purchased 300 units. So 300, we don't need to put units, at $2 each. 2 times 300, that's 600. Now the amount that we have under our purchase right here, that is going to be the amount that we have under balance, because there is none coming from the month before. So all you need to do is to write it back. 300 to 600. Now let's look on the issue if there's any date. So we have the 8th here, so we're going to record that. So now we have the 8th. Alright, so on the 8th we sold 200 units from the 300. So stock valuation, for stock valuation, stock is valued at the lower of selling price and cost price. So here, if you notice, there's no price, because in most cases the stock will be valued at the purchasing price. The only time you will have your stock value being your sales price being lower than your selling price is if the items for some reason or the other cannot be sold, and you're basically selling it at a loss to get them out of the business. For the most part, stock is always valued at the purchasing price. There are situations where CSEC will ask you to use the selling price in this section, but that will not affect the balance on this side, should not. So you would still record it at the purchasing price in the balance section. So here we sold 200 units, so we're going to write that. So it's 200 at the same $2, and that now will be 400. So over in the balance section now, we're going to record what is left. 2 from 3 will be 100, and we'll use the same price, which is 2, and 2 times 100 will be 200. And that's it for that date. So now let's move on to the 10th. So on the 10th, we purchased 500 units. So we are going to put the number of units, 500. 500 now will be at $4. 4 5's 20, so that's $2,000 here. Now over in the balance section, the two items that we have now as our balance, they are not at the same value. So we can't add the 100 to the 500 to get 600 using the FIFO method. So what we will do, we'll write what we had first, which is 100 at 200. And then in this section right below, I'm going to have the 500 at $4. So on the 10th, our stock will be valued at $2,200. So as we go along now, we will just pay attention to the last row in the balance column. So now we have the 18th. So we purchased, so we add the date. On the 18th we purchased 400 units at $5. So that's another $2,000. As we go over here, as we said, the prices change, so we're going to add it. So it's 100 at $2, which is 200. 500 at $4, and that's 2,000. And now we're going to add the 400 at $5, which is also 2,000. So our stock on the 18th is valued at $4,200. On the 20th now, on the 20th here, right at the top, we sold 800 units. Now please be reminded that we're using FIFO, first in, first out. So the first set of items to be purchased will be the first set of items to be sold. So starting from the top, we don't have 800 here, so we have to sell it as in the same order until we get to 800. So we're going to sell 100 at 2, which is 200. So now we have 700 left to sell. So we're going to sell this 5. We're still short 300, so we're going to take 300 from this 400. So we're going to have 300, no, 5 and 3, 8, no, this is 200. So 200 from this 5, 5 2's 10, so that's $1,000. So our balance now from this, because we sold this in its entirety, sold this in its entirety, now we have 200 left. So 5 plus 2, 7 and 1, 8. 200 that's left, and the 200 will be valued at $5. That's 2,000. 1,000. So on the 26th, we purchased 800 units. So we purchased 800 units, so we're going to have 800 at $6. 8 6 is 48, so that's 44,800. Right, so we come over to the balance section now. So we had 200 before, 200 at 5, that's 1,000. Then we're going to add the 800, so we have 1,000 units but at different price, and this will be 6, and we put the 4,800. So our stock is now valued at 5,800. On the 30th, we sold 800 units. Now, we do have 800 units all at once that we could sell, but we're using FIFO, first in, first out. So we must sell this 200 units first. So that's 200 at 5, 2 5's 10, and then we're going to sell the remaining 600 out of this 800. So we're going to have 600 at $6, 6 6 36, so that's 3,600. So our closing stock will now be 200, that's 6 from 8, 200 at $6, which is $1,200. So using the FIFO method, our closing stock would be $1,200, and that's FIFO. Now your LIFO method, so let me take it off split screen so that you can see. the stock card in its entirety. Right. So we purchased 300, then we sold 200 of the 300. We purchased 500, then we purchased 400, and each time we add it to the balance column. So when we reach to this stage, we ignore here, here, here. It's fine if you want to just put the 500 here, then add the 400 here. Once it is that, you will be able to track it just the same. I think using the final column is more effective, but again, it is all up to you. And then we sold 800 units, so from top to bottom. So we sold the 100, then the 500, then the 200 to get 800. Purchased 800 units, and we had 200 before. Then we sold 800 units from top to bottom, left with 200 at $6. So using the LIFO method now, so that was FIFO, first in, first out. Using LIFO, we will use from bottom to top, last in, first out. So here, this would not change. This would not change right here. The change would come right here. So let me erase this part. Alright, so let's look now. So here, last in, first out. So we want to sell 800 units. So what we're going to do, let me remove this so it doesn't confuse. Alright, let me delete all of this, this, and this. Alright, so as I said before, the 20th would change because we sold 800 units. Now using the LIFO method, we sell from bottom to top. So we're going to sell this 400 first. So it's 400 at 5, so that's 2,000. Still not at 800. So we're going to take 4 from this 5 to make it up to 8. So we're going to have now 400 at $4. Oh, this should be 2,000, sorry. And that now will be 1,600. So we sold this. We have 100 left here and 100 left here. So we're going to write now from top to bottom, starting right at the 100. So 100 at 2 will give you 200. Then we have 100 left from the 500 at $4, and that will give you $400. So we have 100 at $4, 400. Note, we sold all of this, then we sold 400 of this, so we have 100 left. So right here would change also, so let's fix that. So we had 100 at $200. We have 100 at $4, and that's going to give you $400. And then we purchased 800 more units, so that's 800 at 6. So we're now going to add 4,800. So on the 30th we did sell 800 units, so we're going to sell all this. So it would be 800 at 6, which is 4,800, and then our balance would be 100 at 2, which is 200, and another 100 at 4, which is $400. So in essence, our stock would be valued at $600. using the LIFO method. Alright, so that's LIFO. Let's look on the average cost. So with the AVCO method, we will always be averaging. So let me clear the balance section. So I'm going to clear balance, and I'm also going to clear the sales section. Okay, so right here would remain the same because there's nothing for us to average. The AVCO method, you're basically going to take the last unit price, add the new unit price to it, and divide it by 2. You will not have to separate what is it that you got first, what is it that you got last, because everything would now be mixed. So here on the 10th, we purchased 500 units at $4, valuing $2,000. So over in the balance section, we're going to take the last balance, which is 100, add it to the 500, so that's 600. Take the 2 unit price, which is the 2 and the 4, add them together, that's 6, divide it by 2, you now get 3. So the unit price will now be 3. 3 6s, 18. Alright, continuing. On the 18th, we purchased 400 units at $5. So we're going to come now, 4 plus 6, our last balance plus what we purchased. So that's 1,000 units. $3 plus the $5 will now give you 8. 8 divided by 2, that's 4. So our stock will now be valued at $4,000. So on the 20th, when we sold 800 units, it would now be 800 at 4 8's 32, and then we would come here and just check the balance. So 8 from 1,000 will leave 200. 200 at 4 will give you 800. On this day, the 26th, we purchased 800 units, so we will now have 1,000. That's the 8. This 200 plus this 800, so that's 1,000. The 6 plus the 4, that's 10. 10 divided by 2, that's 5. So that's $5,000. Alright, so on this day, the 30th, we sold 800 units. So now we're going to sell 800 at $5. 5 8's 40, that's 4,000. So we will now be left this 8 from the 1,200 units at $5, 1,000. So your closing stock will be $1,000. So part B of the question asked, this was in relation to the AVCO method. So it said, what is the value of total purchase for the month? So all you'd have to do is look in this column and add up the total right here. So this is 4,008 plus 2,000, 6,800, 8,800, 8,800 plus 600, that will be 5,004. So the answer here, $5,400. Let me change the color. Or just highlight it. Right. Value of stock issued, same thing. Add up this column. So that's 4 plus 3,200, 7,002 plus 400, 7,600. It's just that this amount would not be used in your trading profit and loss, because for your trading profit and loss you would need the selling price. So this now 7276. Alright, the value of the closing stock at the end of August, $1,000. So the closing stock is always that last value that you get, that you'll get in your on your stock card. So it says what information from the stock card should appear on the trading account. Sales, and it's just asking for one, so I'm just going to give you a combination. So from this you get your purchases. You can get your purchases. You can also get your closing stock, and you can also get your opening stock. Alright, and then it also asks which information would appear on your balance sheet, and that's definitely your closing stock. Yeah, and that will be it for stock valuation.